A wonderful good afternoon and good evening, good morning, hello, good day, wherever you are and whenever you are watching this video or this webinar here live. I'm really happy to welcome you here, and I'm really glad to say hello. Behalf of SabioTrade, it's me, Markus from Know-How Trading, and I'm really happy that we can talk about trading today again. I hope your trading is going well and you're very successful. And today we want to dive a little bit deeper into the absolute beginning of every kind of trading. So I guess the technique is working. Let me check this on my phone. That you can follow me. Yeah, I see it's working. Then everything is fine. Okay, so maybe you can text a little bit in the chat where you come from, what's your name. If you have any questions, please feel free to ask. Type in the chat box. We can talk about everything. It's your webinar. We don't want to talk about myself because I'm not important. I just want to share my knowledge and my experience with you. All of us, we are traders and we are working for the same goal. We want to make money with trading, and in the best case, we want to make trading for a living. And here on SabioTrade, we have a great chance to do this because we created many content in the last weeks, and something very exciting and great news coming soon. And especially this way to get 1 million from SabioTrade to make trading for a living. But before we come to that point, we want to talk about the topic, what we created for today. And let me share my screen. Okay, great. So our topic for today is understanding basic candlestick charts. So I don't know how many or how much experience you have in the meantime, how many charts you've been watching in the past and you're watching at these days, and you will watch in the future, maybe many charts. First of all, we need to have a deeper understanding where does those so-called candlesticks coming from. And I want to apologize for my voice because 2 days ago I catched a bad cold, and today is the first day I'm feeling a bit better, but I didn't want to cancel this webinar because I want to do something good for you, and I want to help you to avoid common mistakes of beginners. They mostly follow emotions and luck. And in my opinion, after 25 years of doing trading and trading for a living, I can say emotions might never influence your trading, because trading is a game of math. It's a zero-sum game. And in the end, if you trade with emotions, you will lose. On the long run, you must lose. But at the moment you understand that trading is a game of math and logic, you have a great chance to make money with trading, and maybe trading for living. And before we come to that, let's go to the basics. And first of all, let me show you something. We need to understand one thing. So for example, if you open your SabioTrade chart, any kind, maybe the DAX or the Dow or whatever there is, then you see this chart. And then it's a kind of perception, because you look with your eyes. And as we know, whatever you see, it's your personal or individual perception. Because, for example, if there were sitting 2, 3, 4, 5 people beside of me, and all of us, we were looking at the same chart, I'm quite sure we would have 5 different opinions. Why is that? Because whatever you see, whatever you perceive with your 5 body senses is a part of your own perception. Your kind of seed is open up, and then you see what you see in your reality. Another person has another reality. The next person, the next trader, has a completely different opinion and reality. I give you an example. We discuss about some meanings of some words like big, or let's say tall. So for example, I'm 172. In the morning, 174. So my height is 172 centimeter. So would you say this is tall or not? Okay, it's a kind of perception. Because if there is another guy who is 180 or maybe 190 centimeter, he would say, 172 centimeter is not really tall. But maybe there are some people, they are maybe just 160 or 150. Believe me, those people would say, oh yeah, 172 is a kind of tall. So whatever you see, all those words, big, medium, small, nice, beautiful, ugly, whatever there is, it's a kind of perception. Yeah. Especially for us guys, when we go to the street and we're looking at beautiful women, then one guy would say, oh, wow, stunning. Another would say, no, really? No, look at the next one. So you see, it's always a kind of perception. The problem is, if we work with perception in a game of math, in a field of math, you cannot win. That's the reason why we have to go to the absolute basement, to the foundation of trading. So, I'm sorry. I try to do my best. So, whatever you see in your chart, at the end, you have to make a decision, at the right edge of the chart. It's always the same. At the right edge of the chart, here we go. Yeah. So this is a fact. This is a fact. Yeah. It's quite simple. This is a fact because that's the past and that's the present. That's facts. What's coming next is the future, and we will never know. As long as you cannot directly influence what happens there, you will never know. I give you an example. I know today, around about 7 o'clock p.m. after this webinar, and last update for my Dauha family, I go home. I go to my car, get in, start the engine, and I drive home. That means I have a kind of guarantee what happens in the future. That means round about 7:30, I'm quite sure I'm at home. Unless I have a heart attack in between, I die, or I have a car accident, or something else. A kind of rest risk is always there. But most of the times I would say I can influence my own future. Kinda. Because I have it in my own hand. I hope you understand what I try to explain because this is very, very important. But in trading, we are a part of the game, but we cannot influence the future. Not at all. Not a piece of it. Absolutely nothing. So, uh, what I try to explain is that if you work here with perception, and then you look at the chart and you say, yeah, maybe this happens, or I hope this happens. At the end, you have to make a decision. So you click here, maybe on our platform here on buy or sell. And then, yeah, you send the order to the broker. What happens next? Your order is going to the order book. You have here an insight to the order book. Yeah. So this is your order book, for example, and your order is a part of the order book. And you see, in the middle, we have the price. The left side, we have the volume from the buyers. And from the right side, we have the volume from the sellers. And if the volume on the buyer side is higher than on the seller side, the price is increasing. And if you have more volume on the seller side, the price is declining or declines to the lower side. Okay, so that's all. That's trading. That's interesting. At the beginning of trading, there is no chart. At the absolute beginning of every kind of trading, of every product around the world, of every exchange, there is no chart. There are no candlesticks, nothing, not at all, absolutely nothing. There's just only the order book, because the task of the exchange is to keep buyers and sellers or supply and demand in balance. That's all. Nothing more to do. The second step is the so-called time and sales list. And today, in the early stage of trading, human people were doing this. They catched the volumes for buyers and sellers by call, by phones, by paper, something like that. And then they created that. They created by mathematical calculations with the calculator, or in the early stage with the mind, and created a new price. And today we see it in a time and sales list. And you see here, that's the time and sales list. And here is also the price and the volume and the time. There is absolutely no time frame. There's just a time, kind of slip. A new price, how many contracts were purchased or changed from buyers to sellers, and the time. The beginning of trading, the absolute beginning of trading, ladies and gentlemen, there is no chart. There are no candlesticks. There is nothing graphically, nothing, absolutely nothing. Just only the numbers, no more, no less. So, and then in a step number 3, and this what happens when internet and online and computer came up and the people started to work with computers. Until the 50s or 60s, there were no computer guys. There were just the order book. No one, no matter what, just the order book. And then the first people, like a guy like Mr. Richard Donchian, they started to make graphs on papers. Yeah. And the graphs on papers were, like we could say today, the tick chart. So whenever there is a new price, the tick chart creates one tick. So I give you an example. Here is a new price, one purchase, one contract sold. There is one tick. So, and in the 50s and 60s, when the traders began to make graphs, and there were just only daily charts, no computers with 5 minute or 1 hourly chart, nothing like that, just daily. There was the price of the day before, and there was the price on the day today. Tomorrow there was a new price, and when the stock exchange closed, we had a new price. Yesterday the closing price was that. Today that was the closing price, and this is like the tick chart. So whenever there is a new price, we have one tick. So, and that's all, guys. That's really, really all. That's everything. What you do now, and this is the crucial part, what you do right now after that is just only your decision. Trading, the broker, the industry, no one cares what you do with those numbers in the order book. No one cares. Believe me. No one cares. That's the reason why you can use different expressions from your chart. If you open the platform here on SabioTrade, look, there you have the button chart type. And there you have different chart types. You have the candles with filled or not filled. You have a line chart. You have a bar chart. Look, that's a bar chart. Oh, that's a bar chart. And finally, you have a Heikin-Ashi chart. Yeah. So why you can do this? Because no one cares. Interesting, right? No one cares. Because the beginning and the end of every kind of trading is the order book. And the moment we created a new price, trading is done. All people were looking at the price. And how do you express this in a graphically way? No one cares. Absolutely no one cares. That's the interesting part of trading. So therefore, you can create your own chart if you want. But at the end, we need to understand, ladies and gentlemen, that trading is a game of mathematics and pure logic. The end of the beginning of trading is based on two numbers, price and volume. Numbers, no pictures, no fundamental data, nothing like that. Beginning and end of trading is always in the past, in the present, and in the future. As long as trading will keep going, numbers. Basement is numbers. So therefore, your perception, what you perceive, is absolutely not interesting. No one, it's not a matter, no one cares. I hope you understand this. So, and therefore, you can go to your chart and can choose whatever you want. So, where does the candles come from? Let's dive a little bit deeper. Candlesticks charts originated in Japan over 100 years before the West developed the bar and pointed finger charts. 100 years before. Mr. Homer discovered in the 70s century, while there was a link between price and the supply and demand of rice, not beans, it was rice in Japan, the markets were strongly influenced by the emotions of traders. There's a kind of joke, at least in Germany, maybe, I don't know if you know the joke, yeah, but if you wanted to, if you say who cares, you could say, okay, it cares as a bottle of rice is falling down, that much it cares for me. It's interesting for me. So that's why we care, where we think about rice. So Mr. Hammer discovered that the price of rice in China and in Japan were influenced by the humans and their emotions. They were trading together. They were discussing together, human beings. And therefore, he created those candles, Heikin Ashi candles. Very interesting. Mr. Hammer created Heikin Ashi candlesticks because he wanted to delete and to exclude the market noise, the emotions. He wanted to be focused on just only the price. Candlestick show that emotion by visually representing the size of the price moves with different colors or expressions. And traders like you and me, we use candlesticks to make trading decisions based on regularly occurring patterns that help forecast the short-term direction of the price. That's what I show you. We look at the price, we look at the chart here, and then we try to figure out something. We want to see something in the future, but we cannot influence the price. And that's the big problem by that. So, what does it mean? Or a candlestick tells us a different story. Let me go back to this one. So once we understand that the beginning of trading is just based on numbers, and the first visual graph is the so-called tick chart. And the tick chart, ladies and gentlemen, has also no time. It tells me just the story. There were 2 contracts purchased at that price at that time. And that's all. And then my used platform or software created one tick. If you have a professional software like just I use here for my trading, I use the software from SabioTrade, of course. But just to explain this point, then there is just one tick. And no more and no less. So how does the candlestick create right now? It makes your software. It's just only based on your software. For my software, I can say right now, look, I want to see not only one tick, I want to see, please show me in one candle what happens from maybe 6:15 until 6:16 or the last 5 minutes. Yeah. So, and then I know, okay, that was the beginning, 6:15. That was the high. And maybe that was the low, and that was the close of this 5-minute period. And that is created, ladies and gentlemen, by your software. Not by the trading, not by the stock exchange, not by the exchange, not by nothing, just by your software. So that is why you can tell your software, please show me a 5-minute candle. Please, my dear software from SabioTrade, show me what happens in the order book in 1 minute. Please, my dear software, please show me what happens in 1 hour. And this is also your decision. Not a decision of trading, not a decision of the stock exchange, not a decision of SabioTrade. No one cares. Absolutely no one cares. Guys, really, it's your decision which time frame do you choose. And there is, by the way, no best time frame. There is basically absolutely no time frame in trading. The beginning and the end of trading exists just only by volume, by price and volume and numbers. There is no time frame in trading. There's just only the time of open and close, over and out, no more and no less. So it's your decision that you tell your software, or you say to your software, please, I want to see what happens in 5 minutes. I want to see what happens in 2 minutes, in 1 minute. So, and then your software puts the behavior of 1 hour, for example, 1 hour. Let's make 5 minutes. In one candle. So what happens? So you see, in this time, beginning 6:20 to 6:25, the candle is red. What does it mean? It's really simple. Let's go back to the presentation. So let's make a clarification. The candlestick has a white part, which is called the real body. It could have color black or green or white or red, whatever there is. And this real body represents the price range between the open and the close of the time you were looking for. Time period. It's your decision. Could be 5 minutes, 1 hour chart, 1 minute, it doesn't matter. It's your decision. Yeah. So when the real body is filled in, black or green or whatever, means, okay, there were more volume on the buyer side. If the real body has another color or is empty, it means that the volume on the seller side was higher, which means the close is lower than the opening in the period you were looking for. Not at all. Has nothing to do with trading. It's just what you want to see. For example, we could trade, both of us, we could trade, for example, Dow Jones. I don't know what kind of time frame you are looking for. So I trade Dow Jones in 5 minute charts. I trade Australian Canadian dollar in 1 minute chart. So for me, I say to SabioTrade platform, yeah, please show me what happens in 1 minute. And you were looking at the same time frame, and you were looking at the same product like Dow Jones, but you were looking at the 5 minute chart or 1 hourly chart. So we trade the same product. It's like we go to the same grocery, we go to the same store, yeah, and we're looking at the same product, but you're looking for the copy and I'm looking for the original. So different, same product, but different time frames. Or for example, I go in the store in the morning and you go to the store maybe in the evening. So if the real body, and this is how, or otherwise, this is how the candle is looking. Yeah. So if the real body is empty, then the close is lower than the opening. Yeah. And that means how the candle is look like. Look at the platform again. So for example, that means we look at this chart here, this candle, the red one. So you see, it's a red one. And you see the green one means it's going up. The red one is going down. So that means, look, that was the opening. That was the opening price. But it's a red one. I have chosen the red color here right now. And this is the close. which means if we think again in the order book, then we know in those 5 minutes, we had more volume on the seller side. Guys, there is no reason why. No one cares about the why in trading. Why? I tell you, you need to understand really, it's not a joke. Look again in this one. Do you see? That's the order book. And such an order book exists for every product around the world, for every product. Do you see any row where you can type in your name or your reason why you want to buy or sell? I don't see it. In the order book and in the time and sales list, there are just only 3 rows, always. In the order book, you have the price, volume seller, volume buyer. In the time and sales list, you have the row for the price, you have the row for the size, and for the time, not time frame. Be careful. For the time. It's like you go to the store, you buy something, you go to the checkout, and you get your slip. On the slip, there's the product name, the price, how much, and what time you leave. That's all. That's the order book. So, and therefore, there is no reason. Never ask, please, in God's sake, never ask in trading why something happens. Why is the price going up? Why is the price going down? Never, never ask. Why? No one cares. There is no why. Because for the question of why is always one logical answer. Because, in God's sake, the volume was higher on buyer or seller side. There is no further why. Otherwise, you have to call every trader and to ask them, oh, why were you selling? Why were you buying? Why? Can you do that? Of course not. You cannot. So therefore, stop asking yourself why the price is going up or down. Because there's always one simple answer. And the answer is the volume was higher on the one or the other side. There is no reason why. There is no explanation. And as long as you cannot influence the price, no one cares. So let's go on. Okay. So you see, here we have a little bit different between a candlestick and a bar chart. Yeah. Oh, just let me show this for you again. At such a candle, again, it's a red one. It's the opening. It's the close. And more than that, we have a high and we have a low. Which means in that 5 minutes, the price opens at that specific price. Then we had more volume on the buyer side, which means the price went up. Then the sellers came back with more volume. The price went down, 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 made a low. Then the buyers came back, a little bit up, and then the 5 minutes were done. So, and that's over at all. An hourly chart candle could be like really, really different. That's the reason why you should be really careful about what you perceive in your chart. So look, another candle. It's a green one. So for example, this candle. That was the opening price. And that was the closing price. Which means we had basically in that 5 minute more buyers than sellers by accident. Because the price has a low and a high. That's why we talk about open, high, low, close. 4 prices. Every candle, it doesn't matter a normal candle or a bar chart, shows you always 4 prices. Open, high, low, close. Which means the price opens here. The price opens at that price, then went up to the top. Then the sellers come back, push the price down to the low, and then the buyers come back and push the price. That was the sorry, that was the opening. Sorry. Then the high, then the low, and finally the close. So every candle tells you a story. Yeah. Every candle tells you the story of the order book. That's all. That's really all. It tells you the story of the order book. Do you have more volume on that side or on this side? So, and the same you can see in bar charts. Yeah. Just with a little bit different expression. Yeah. Just a little bit different expression, but it's the same. It's the same one. Yeah. For here you can see it's the same procedure. Yeah. But so in the green one, you have the opening price, you have the closing price, you have a high and you have a low. And if it's a red one, yeah, you have an opening, you have a high, and you have a close. The same expression is the same story, but just another expression. Yeah. And of course, in line chart, there are absolutely no time frame. Yeah. Just you see the price is going up and down. And you see the ups and the lows here, maybe between 8:30 and 8:35, 6:35, roundabout. In line charts, there are no time frames. Yeah. And my preferred one is Heikinashi. Yeah. Heikinashi, it's more simple because there are 6 prices. Open, high, low, close from the previous time period, plus open, close from the current time period. Therefore, you have no gaps in Heikinashi. But Heikinashi is a different topic. We want to create a different webinar about Heikinashi. Yeah. Let's keep going with normal candles and bar charts. So, and you see that's the big difference. Yeah. The relationship between the days open, high, low, close determines the look of the candlesticks. Yeah. So real bodies can be long or short, the black or white, and the shadows can be long or short. So bar charts and candlestick charts show the same information. It's just a different way. Candlesticks more visual due to the color coding of the price bars and thicker real bodies, which are better at highlighting the difference between the open and the close. Yeah, but basically it's the same one. Here you see the difference. The picture charts show the same Dow Jones here. It's the same time period, but it looks like a little bit different. Yeah. So the lower chart use the colored bars, while the upper uses colored candlesticks on the right side. Left is bar chart, and right is candlestick. So it's just what you prefer. The information is exactly the same. So candlestick patterns. You need to interpret what you see in the chart. Candlesticks are created by up and down movements in the price, no more nor less, as I explained about the order book. So while these price movements sometimes appear randomly, at other times they form patterns that we use for analysis or any trading purposes or trading decisions. We have many candlestick patterns. There is a book from Steve Neeson, you can Google it. It's called Candlestick Patterns. So thick. This book is that thick. Thousands of candlestick patterns, which means you must interpret. interpretation. For example, I show you two things. Bullish patterns indicates that the price likely rise. Bearish patterns indicates that the price is likely to fall. But there is no guarantee. There's just only probability. So for example, a bearish engulfing pattern develops, an uptrend when sellers outnumber the buyers. So this action is reflected by a long red body engulfing a small green body. This is like this one. So you see the green one is engulfing from a red one. Yeah. And this pattern indicates that the sellers are back in control and that the price could continue to decline. Because, be careful, could. It's a probability. There is absolutely no guarantee. Yeah. An engulfing pattern on the bullish side of the market takes place when buyers outpace the sellers. And this reflected, for example, this one. Yeah, a green one engulfing a red small candle. And this is reflected in chart by a long green body engulfing the small red one. And that means bulls having established some control, the price could heat higher. There is no guarantee, ladies and gentlemen. Yeah. So the bottom line, as Japanese rice traders discovered centuries ago, investors' emotions surrounding the trading of an asset have a major impact on the asset's moves up and down. Candlestick help traders to gauge the emotions surrounding a stock or other assets, forex, whatever there is, helping them make better predictions about where that stock might be heated. Actually, still no guarantee, ladies and gentlemen. Still no guarantee. So the best thing is, and this is what you learn when you follow me, the best thing is if you work with clear rules. At the end, you can make it easy. Instead of interpret many patterns, instead of perceive something, use the platform, go to Heikinashi, and then there is really simple. Whenever the color changes, it's completely clear that buyers are back. Sellers are back, sorry. If you see the green one, then it's really simple and really clear how the buyers are back. Yeah? Okay, that's 5 minutes right now. Let's take 5 minutes, for example. So, and you see, and of course, the higher the time frame, the more valuable the expression, or the higher the value of one candle. So whenever you see the color is changing, then the price is moving to the other side. And this is the basement of trend following. Can you see that? Where is the trend going? Is there something to perceive? No. It's a really clear thing. Yeah? Because you see, okay, price down, up, down, up, correction, movement, correction. At the end, it's a trend. At the end, it's a trend. At the end, it's a trend. Yeah? So you can really make a quote of that. In every kind of trading, at the end, it's a trend. How cool is that? So this is what you can learn in the basic information about every candles. It doesn't matter which one do you use. So therefore, we can make a quick conclusion. Candlesticks charts are used by traders to determine possible price movements based on past patterns. But be careful, every candle just is a visible legacy from the order book, no more, no less. The beginning and the end of trading is always, always, always numbers. Therefore, be careful what you perceive in your trading. Candlesticks are useful when trading as the show 4 price points, open, high, low, close, throughout the period of time the trader specifies. Many algorithms are based on the same price information shown in candlestick patterns and charts, by the way. Trading is often dictated by emotion, which can be read in candlestick charts. So therefore, what do you need to become successful in trading? It's really, really simple. The strategy in trading is given: buy cheap and sell expensive. Now, as next, you need rules to find the perfect entry and to find the perfect exit. This is why you need an education. This is what you have to learn. Not to find the holy strategy. The strategy is given: buy cheap, sell expensive. You need an approach. You need rules, mathematical rules for your entry and your exit. And this is what we'll show you here on SabioTrade in the education part. Yeah? If you go to your platform, yeah, then you will find, for example, I can show you this. I show you exactly this one. So if you go to your Sabio trading platform, yeah, and then you have here the button education, yeah, and there you will find the last live webinar. Here we have 6 ways to avoid emotional trading, yeah, and here you will find many, many videos, yeah, and very, very soon, yeah, you will find the tutorials, the webinars from me and my colleagues, articles, and of course, ebooks. Please use that platform for yourself, yeah, that you learn many, many things. Okay? So that's what I want to show you today. At the end, I want to tell you always the same story. In God's sake, please make first an education. Invest in your education. Don't use your own money to open an account. Use your money to open a prop trading account here on SabioTrade and learn trading with my colleagues and with me. And then you can become successful with trading. This is just my proposal for you. Thank you very much for listening to me again. I hope we see each other in 2 weeks ago. In 2 weeks, yeah, in 2 weeks, not ago, in 2 weeks in the future for the next topic. And now I wish you a lovely evening and all the best. And I hope we see each other at SabioTrade. As always, have courage and be kind. And may the force of the logic be with you. See you. Bye-bye.